You and I probably have a lot more in common than you might think. I am just a freaking human being. And the only thing that makes me slightly unique, in a sense, is that I've happened to have figured out the skill set of trading. I've been trading over 8 years. 6 of those years have been profitable. For 6 years, I've called out pretty much all my trades and analysis and insights in my free Telegram channel with about 60,000 members. The first link in the description, you can join for free. And last week, I had the best trading week of my entire trading career. It was $114,000. And what makes this even more ridiculous is the fact that I called every single one of these trades in my little Discord group, the MFX Nix Trades group. And I broke 2 personal records. The first record is that the most money I've ever made in a day trading. It sounds almost ridiculous saying out loud. My hands were shaking as I closed that trade last week. I made $83,000 in one day. I've never done that before, not even close to that. The second biggest record I had was the most money trading Forex specifically that I've ever made in a week. It was $114,000, like over $100,000. If you had told me that 8 years ago when I'd started trading, that I would be able to make $83,000 in a year, I would have been jumping up and down. That's enough to pay bills and live a decent life here in a first world country like the United States. If you'd have told me I'd make $83,000 in a month, I'd be skeptical. If you told me I would do that in a week, I would start laughing. And if you had told me that I could make $83,000 in a single effing day, I wouldn't have believed you. But here we are. It is so ridiculous, the fact that something like trading is ultimately so simple. In theory and in practice, if you do it appropriately, trading is in fact simple. And I'm not lying to you. I'm just giving you my opinion. Yes, trading is risky. Yes, most people lose money. Yes, only a small single-digit percentage of people can make enough money to actually be sustainable, be consistent, and predictably profitable long term. I'm not here to lie to you or sugarcoat it. I'm just saying that the people that do figure out trading, it is generally something so ridiculously simple that it runs circles around everyone else playing all these mental gymnastics, arguing with each other in the cacophony of voices online. And in the very comment section of this video as well, you will see people spouting their opinions and all sorts of different things. And ultimately, none of it matters. If you figured out trading for yourself, that is all that matters. And it can be literally anything. From what I've seen, most of the time, it's very simple. For years, I have kept things ridiculously simple using essentially a hybrid between support resistance and price action. If we're drawing these, just so you know, I'm not being a hindsight warrior here, just drawing little cherry-picked up and down arrows and showing stuff. I have been doing this live for 6 years. Go see for yourself on my Telegram channel. I've been doing it since 2018. We're currently in, at the end of April in 2024. 6 years I've been trading live in there. And I also call the exact trades in this little Nix trade server in Discord. So that being said, let me just give you the little hybrid. Let me just show you the little concept. That way you just have a simple basis for what it is. All I generally do is just use support resistance and price action. So support resistance is not just zones that you find on the chart. It's also highs and lows. So anywhere where price has a little bit of a reversion at, meaning it hits an area and then it starts to kind of bounce at, and anywhere that price might have a potential reversion at, such as when price makes a higher high, generally what you see is price pulls back, tries to make a higher low, and then, it might bounce there at the higher low and go up and continue a trend. Little things like this, right? Price just bounces around. What's even crazier is that you don't even have to do all that. Check it out. If price is going up, and then price is going down, then price is going up, and then price is going down, and then price is going, and then it's just doing this over and over and over again. And you get to the point here in the future where price has gone up, and you think, well, price might go down at some point. So what do? You get this bright special idea to go and take a trade, perhaps getting into a sell, a short position. You think that price might at least come back to maybe touch the previous high that it just broke, so you put a profit target right there, and then a 1-to-1 risk-reward ratio. Now, the interesting thing about this is that how I learned this was just through, it was almost an accident. I stumbled upon it by accident about a year into my profitability, when I noticed that with a 1-to-1 risk-reward ratio, entering randomly, blindfolding yourself and just entering random buys and sells on any asset with a 1-to-1 risk-reward ratio, risking the same dollar amount to make the same dollar amount, every time, is going to land you at roughly break even, pre-commissions and pre-swaps, which will peel at a little bit of the profits. However, you're going to be roughly more or less break even after 100 to 200 trades. If you don't believe me, you can very simply validate this hypothesis, I would call theory, since it has evidence to support that it's true. You can go and validate this yourself by going to a chart in the backtesting replay mode of TradingView and literally just buy and sell anywhere with a 1-to-1 risk reward ratio. 20 pip stop, 20 pip target, 50 pip stop, 50 pip target, whatever the hell you want. You are going to find that given enough trades, again, at least 100 to 200, save for anomalies and outliers and crazy trending markets, you will roughly be about a break-even trader. And guess what? Most people can't even be break-even. This includes you. You probably cannot even be break-even, but if you just did that, entering randomly with a 1-to-1 risk-reward ratio, you, my friend, will be ahead of 90% of traders. But wait, there's more. If you start noticing the proclivities and tendencies of what price does after you enter a trade, you can do two very fancy special things. Number one, trade selection. You can wait for potential trading opportunities that look like they have, in your subjective opinion, a higher percentage chance of maybe working out. That's all I'm saying. You just kind of get a feel for it, right? This is just basic experience, subjective discretion. Your opinion on, I just think price is more likely to bounce here or continue here or do whatever the hell it is you think is it. Price just made a new high. You just think it might be likely to pull back and then make a higher low. And then you think it might be likely to go back up and then make a higher high. It's just all your opinion based on experience. That applied experience is what generates an intuition. Now, the second thing that comes from doing this 1-to-1, entering randomly with a 1-to-1 risk reward ratio situation, is that it also allows you to develop a sort of discernment of price action to where you can look at a chart and you can start being able to quote unquote feel what you think is likely to happen next. And this becomes valuable because whenever you're in a trade that you think is not likely to continue all the way to the profit target, you can get the F out of the trade. If the price is going sideways and you've entered and your trade's been a break even, it's been 2 or 3 days and you no longer think it's going to work out, you can close at break even. If price starts going against you and then it pulls back to the entry and you think it's more likely to go back up to the stop loss, in this case, you can close the trade at a small loss or a break even. If price is going against you and it goes halfway to the stop loss after you enter and then it just starts floating sideways, doing this little patchy, rangy stuff, you can close at a smaller loss than what the stop out is. So keep these two things in mind here. If you go to a chart randomly, and you just do 1-to-1 risk reward ratios, and you just do this for like 2, 3, 4, 5, 6 months, or even a year on a demo account. For F's sake, please use a demo account or a tiny live account with money that you're comfortable risking. Not personal financial advice, just general suggestions and information for entertainment and educational purposes only. I'm just saying, go test it out on a demo account. See for yourself. You're going to have roughly a break-even win rate. But then as you get more experience, your trade selection skills and your trade management skills begin to develop. Now, here's where this is so freaking interesting. Over the past 6 weeks, this is the past month and a half, I not only have taken it's between 15 to 20 trades. If you want to see for yourself, just join the Next Trades group. You can scroll through all the history, all of my trading history for the past month and a half since I started the group, essentially. I have about a 90% win rate, which is really insane. I've literally only taken losses on 2 positions, like on 2 trades, 2 separate trading opportunities. Everything else has resulted in either a net profit or a break even. In addition to live trading and doing this, I've done multiple backtest simulations. Of course, past performance doesn't indicate future results and all that stuff that you always hear everywhere. This is just simulated results. This is not real that I'm showing you anything here, but I've done about 22 backtests, maybe 25 at this point. And I've gone back 2 years of data on each currency pair, and a couple of those are the same pair but with different data. I took different segments of data on liquid pairs like Euro USD, and I found that my win rate is anywhere from usually a 55 to 65% win rate. Some cases it's 75%, some cases it's 63%, some cases it's 68%, some cases it's 61%, and in some cases, like live trading, calling my trades out live to hundreds of people, if you count the Telegram, tens of thousands of people. Everybody's scrutinizing every little move I do with a freaking microscope and magnifying glass. I have somehow managed to have a 90% win rate, insinuating and also directly proving that, in fact, I do trade better in real life than I do in a backtesting simulation, which is really insane. So how have I been able to get my win rate to like 88 to 90% over the course of the past month and a half? It has been exercising nothing but just intuition. And then, of course, that intuition helps me select which trades I think have a higher than 50% chance of winning based on all my experience, a conglomerate of the past 8 years of trading data and going through the motions and seeing the same crap happen over and over again. And then on top of that trade selection, I can look at the price action for trades that I'm in and opt to close at break even or a smaller profit or, this and that, whenever I think it's no longer likely to go to the target. Just last week, one of the last trades that I took, this one right here, AEDJPY, you can see it on my terminal. This is my actual trading terminal. I took a sell up here. This one came down here to the profit target. It wasn't to the profit target. The profit target was actually lower down there. The sell was up there, and then the stop loss was up here. So I gave myself plenty of room. It could have gone into more drawdown and then pulled back, and I could have just gotten out at break even. But instead, this went right into profit. I thought it was going to bounce and reverse up there. So I closed, and I just so happened to have got the entry perfect and the exit perfect. And this doesn't happen for every trade. This only happens for about half of the trades that win. The other half of them will be, a little bit of drawdown, then profit, or it'll go into the profit target, then it will pull back and then go sideways, and it was a break even or something. But this was a good trade. How did I quote unquote know to get out of this trade there at that profit right before it reversed? I don't know. Honestly, I have no clue. It is just intuition and experience. How can you develop this? Just trade on a demo account. You're entering trades that you think are likely to work out. You don't even have to have any analysis. You know what my analysis on AEDJPY right now is that I'm waiting for? That I'm looking to take this trade next week, where I'm going to be risking anywhere from $50,000 to $75,000 on this trade. You don't know my whole analysis? This is my whole analysis. Price has been going up and down and up and down and up and down and up and down and up, and it's gone really far up, and I think it's going to go down. That's it. Price has just gone really far to the upside. I just think it's overextended. I think it's likely to pull back. Now, how? You can say, Nick, what about the candlestick patterns? What about the bullish Kobe steak, Wagyu beef discrepancy, fair value, influence gap of the bank manipulation, liquidity, balance sheet, order for the commitment of traders report, Nick? What about that? And I'm like, I don't know. I don't really understand any of that. I don't understand anything except for price action. And the only reason I understand this mysterious concept of price action is just because I've seen it happen over and over and over again. Think of it this way. You are not going to learn trading by any type of magical principle that you can't even inspect. Imagine you're trying to learn how to ride a bicycle. And I give you a whole college lecture, and I got this whiteboard with all these drawings and all this BS of you just like, okay, I'm learning the theory and the angular acceleration of the wheels keeps the bike upright. You know what would be so much easier is if I said, hey, Jack, let's just scratch all of the BS that I'm about to teach you here for the next few weeks in this course. And instead, let's just go outside. I brought my bicycle, and I'll just let you get on the bicycle, and then you can just try to balance it and hold onto the handlebars and try to keep it going, and I'll stay with you in case you start to fall. Then I'll hold the bike up, and then you just learn through experience. That is going to get you to your goal of trying to ride a bicycle proficiently so much quicker than any amount of, in theory, mental gymnastics and self-delusion and self-deception of trying to learn all this confusing stuff about the theory of it. What really matters is getting out there and actually trying it, and trading is no different. Riding a bicycle is probably not something that can make you millions of dollars unless you somehow get into X Games or professional BMX. But even then, I have a client who does that. Poor fucking guy only makes 30 to 40K a year. He's a professional BMX rider. So you're unlikely to get super, super rich riding bicycles. However, if you learn a skill set such as trading, which I'll also throw out there is significantly less dangerous than trying to ride a bicycle, that skill set, just the simple skill set of trying to pick out when the hell you think price is going to go up or down and just buying and selling, this skill set can make you untold amounts of money. Ungodly, disgusting amounts of money. $83,000 in a day type of money. Am I saying this is going to happen to you? Absolutely effing not. I don't think it'll happen to you. 99% of you on this video watching this will not be able to make this happen. And I'm not talking to those of you who are going to be giving up and going to be saying it's too hard, I'm not going to be able to do it. I'm talking to those of you here on this video who are fixated on making trading work long term. Because it is you and your type of brain that is committed to the persistence required to actually do something like trading, knowing that it's probably not going to work out for you, and knowing that most traders lose money, and knowing that trading is extremely risky and that your chances of making ridiculous amounts of money is almost zero. For those of you, however, who take the time and commitment to the persistence required to generate the experience necessary to dictate that level of intuition where you can start picking trades out, like just you look at a chart and within seconds you just see a setup. That is what is very rewarding. Trading, there's no limit to the amount of money you can make. Let's go to the AED-JPY chart. I'll show you literally. This is my analysis, okay? We're going to clear all this out. And we're going to recenter the chart. This is my analysis on AED-JPY. Here, we'll go to the 4-hour. Everyone, tries to tell you all this crap. Either you look at the time frame, don't look at the 15-minute, only look at the 4-hour, check the daily once a week. It doesn't matter. It's just the same chart. You're just looking at it on different time frames. It's like literally not that big of a deal. Go to whichever time frame makes the most sense to you. I just suggest in general, I've seen most people get good using like 1 hour, 4-hour, daily, somewhere in there. If you're using weekly and monthly, the trades just take so long to play out. You can do it, but if you want to be sitting in a trade for 17 years and having to pass down that trade to your children to then manage, and then they have to pass that down to their children, then your grandkids are managing a trade that you entered 77 years ago. You could be my guest. If you want to trade the century chart, the decadely chart, that's on you, bro. /sis, if you're a female watching this video, welcome to the channel. So if you're trading on the 10-second chart, though, your spreads are probably going to screw up a lot of this stuff. You're targeting 3 pips, but your spread like here on AED-JPY is like 6 pips right now. That's just probably not going to work out. And plus you have to, like with leverage, like for instance, this is my Forex.com account. I don't actively trade this account. This is like a burner account. I made 15K on this account last week, but again, this is not my real account. Wherever it is a real account. So I don't even know if this could be a demo account. Could this be a demo account? Can you see primary? Yeah, I've got my 2 Forex.com live accounts right here. Well, whatever. It's a real account. However, you have low leverage, so if you're scalping the low time frames, you're not able to risk as much. This is that last AED-JPY trade that I took. Again, I took this on a couple different of my accounts. One of them I have with MT5. Those have higher leverage brokers, but this Forex.com account only has 1 to 50 leverage. So I made 5K on that trade, and I think I took another trade last week on this as well. Yeah, this one. This was the first trade, Euro GBP. And this one made and GBP CAD. This one made about $10,000 on those. So the account was at like maybe 160 or something, and now the account's at 174. So I mean, I make a little bit of money on this account, but really, if you're doing the lower time frame scalping stuff, you're unlikely to make ridiculous amounts of money, in my opinion, unless you have like some sort of a quantitative algorithm in your hedge fund and you work at the Jim Simon's company. I forgot the name of it. Yeah, you guys can let me know in the comments, where there's like quantitative analysts doing a bunch of stuff. Here's the thing. If you stick to the 1 hour, 4-hour daily, I've seen a lot of people get really good results. I'm not giving you financial advice. Just say it. That's just what I've personally seen. That's just my opinion. That's just my experience. So if you're doing that, when price goes up, if you think it's going to go down, it's not illegal for you to have that opinion and enter a sell position. Now you need to structure the risk, okay? So how would you do that? If let's say you enter right here, I'm waiting to enter at 103.5, which is actually almost there. I'm gonna keep this for next week, but somewhere in this general region of where this box is, I think it's gonna reverse somewhere in there. So how is my trade gonna look? My target's probably gonna be down here just before the recent high, just because price generally likes to flip around at previous highs and lows, so we might bounce there. I'd like to be out before then. And I'm gonna keep my stop loss all the way up here. Because what does this allow me to do? 2 things. Number 1, lower position sizing. If you have a tight stop loss, that you have to risk a high amount of position sizing and chews up more leverage and margin and equity, it runs the higher risk of getting stopped out if you're risking large percentage amounts per trade. I like using larger invalidations because it gives you so much time to think through and manage the trade. So let's say that I enter this and price goes against me to there, and then it starts pulling back to where my entry's at. I could just close it break even. I could just get out. and just say, you know what, it was a trade. It didn't go immediately into profit. It went into the drawdown, but I didn't get stopped out. And instead I gave it a little bit of room. So that way, if it comes back, I have the option, if I want to close it around break even. So that's one thing. Second thing is that if this immediately goes into profit, like say like halfway to the target, I can start doing some fancy things. I can like drag the stop loss maybe a little bit closer, or I could put even a break even sometimes. I don't do that very often, but every now and then I will. It just kind of depends on the situation. There are cases where I add to trades. So if a trade starts going into profit, I'll protect the position and then add as price goes more into profit. I did this on, I think it was like 2 weeks ago on Friday. So it was this trade here. I got into a trade on USD Canadian dollar. And then as price started going into profit, you could see all this is like, again, these trades are called out live in the Nick's Trades group. Price started going. I shared that I was in a sell position. I've gotten short with small sizing. I started adding to the trade. I kept adding as it started going. I protected the positions with a break-even stop loss. And then this trade ended up soaring into profit. But my only real risk was maybe like 10K. If nothing worked out and both of these went against me, it's because I added as price started going into profit and I structured the risk appropriately. This trade was like $30,000 over the course of like an hour or two. You can do stuff like that. You can literally do whatever you want. That's the beauty of getting experience trading and learning from the actual price action, is that you can, anything is on the table. You can do whatever you want. You don't have to stick to this BS idea that like, if price hits the moving average and the Wagyu beef bullish engulfing candlestick pattern forms on the 15-minute chart with an engulfing candle wick that's bullish, that's more than 50% of the candle on the 1 hour chart, then I will take the trade and I will use a 1 to 3 risk reward ratio, because everybody says use one good risk reward ratio. You don't have to do all that crap. You don't have to do what anyone else says. You can do what you think is best, because you will have the experience and the data as sort of a compass and a map to guide you to make what you believe personally the best trading decisions are. And guess what? You can risk stupid amounts of money per trade. You can risk, for me, my last few trades have been anywhere from $30,000 to $60,000 of risk per trade. And it's just one of those things where once you get good at trading, like say for this, for example, I'm risking about probably anywhere from $50,000 to $75,000 next week. I haven't decided yet, knowing that I have statistically like an 88 to 92% chance of winning this trade. So roughly a 90% chance of winning. I'm not making those numbers up. These are my actual statistics. This is all documented live. Every single thing was called live here in the Nick's Trades group. That is my effing win rate right now. That is just the case for the past like a little over a month and a half. I think like a month and a half, 6 weeks, 6.5 weeks or something like that. It's all documented live in Telegram and in Discord. And I've made YouTube videos about this. I screen recorded the whole damn history of the Nick's Trades group like 2 weeks ago just to show everyone, because people didn't believe me. I wouldn't either, because I didn't believe that. I thought you could be no more right than 50% of the time. When I started tossing aside my belief that didn't really make sense to begin with, I started asking myself, is there actually a way to predict where the market's going to go more than half the time? So I told myself, well, I'm going to do a little experiment in back testing and forward testing. I'm just going to only wait to take trades that I think are pretty much perfect, in my opinion, right? From a risk structure perspective and from a quote unquote likelihood of the outcome perspective. And I just waited for those trades. My trades went from like 10 to 20 trades a week down to maybe like 1 to 3 trades per week. And with just taking those few amount of trades, I've had a few break evens, I've had a few small profits, and I've had a significant portion of trades continue all the way to the actual pre-designated profit target of 1-to-1, winning the full amount that I wanted to win versus what I risked on the trade. And I've risked anywhere from, like I said, $30,000 to $50,000 on some of these trades. It has been absolutely ridiculous. When you develop this skill set, you can risk whatever you want. I have clients who've started accounts that have risked ridiculous amounts on these trades. I have clients that like literally, there's people, I posted in the free Telegram the other day, but there's people who sent me screenshots saying like this guy said, hey Nick, the first day I joined MFX Nick's Trades and he got $650. And I always ask people, I'm like, is this a live account? And this guy said, yes, it's a live account. And he showed me that it's a live account with something called Octa FX or something. This guy made $650. This is like, again, this is life-changing amounts of money for some people. When I first got into trading, this was a life-changing amount of money. This guy said here, someone named Bob in the Nick's Trades channel in the Discord said, this AED JPY trade, so the one I showed you guys, the one where I sold and it reversed perfectly, and it was perfect entry and exit somehow. I don't know how that happened. He made $250 on this trade. This guy said your CAD JPY trade, he said he passed his funding challenge. I don't like funding challenges, but that's great. The dude did good. There's too many people that messaged me. This guy did, hello Nick, I joined your group 2 weeks ago. I've made 1,200 euros so far. Thanks to you. This guy said, Nick, I just want to reach out to you. I'm working all this, 4 weeks away, 5 hours, return home. He said, what takes me a week of hard physical, mental labor and exhaustion, I made in nearly the space of one evening, genuinely life changing. This guy made $1,700. Some dude named Ben from Australia, and being from the UK. He made $1,700, and he said it's a live account. I asked him, I'm like, is this a live account? And he's like, yeah. It's just absolutely ridiculous. Trading is something that is life-changing. You just need to get some damn experience. It's really not that difficult. It's really not that difficult in theory. In practice, yes, it's not easy. It's really difficult. I completely understand you if you think that I sound delusional saying that it's not difficult. I don't want to parrot this thing to try to make it look like it's easy, because it's effing hard. I get it, okay? I've been there. I started trading in March of 2016. It took me almost 2 years to get to the point where I was consistently, predictably sustainable and proficiently profitable. It's effing hard. I know. I'm not an idiot, okay? I'm not trying to act like it's easy or anything. I'm just saying, once you get the experience, if you are one of the small percentage of people that can in fact get profitable, for those people, it is very simple and straightforward and what I would call easy. And again, that's just my opinion. That is just my opinion that I'm just saying. I think it's easy. For me, trading's easy for me. That's a true statement subjectively, that I look at a chart, within a second, I can tell if there's a trading opportunity there. I can look at a 1 hour chart or a 4 hour chart, and within, I lied, 1 second, maybe 3 to 5 seconds, my brain has to have some time for cognition. It's just like muscle memory. It's like a mental, all these little mental nuances and subtleties all accumulate together. And then the trade is just like, yeah, Nick, good trade. It's here, bro. And I'm like, all right, cool. And then all I got to do is just structure the risk, whether it's a DCA risk structure or using a stop loss or using sort of a grid recovery approach or a pseudo martingale approach, or if I'm going to be adding to the winning trade. There's multiple different ways to control risk. The simplest way to start learning is just use a stop loss and a 1-to-1 risk reward ratio. Not financial advice. I'm just saying, that's just my opinion. I think that's the simplest way to learn. Go to a chart, use a random 1-to-1 risk reward ratio. Literally try it. I'm not joking with you. People think I'm crazy. But it's a true statement. You can be ahead of 90% of other traders, because keep in mind, 90% of people, depending on what metrics and statistics you look at, 90% of people lose money. You can be ahead of 90% of people right now. In my very humble opinion, not financial advice, just a general suggestion, just my opinion. You can be ahead of 90% of people by simply going and entering random buy and sell orders on a demo account with a 1-to-1 risk reward ratio. That's going to roughly get you to break even after, given enough trades, 100 to 200 trades. If you do that, just try it. Literally, you have nothing to lose you could do this in an afternoon on back testing on the TradingView replay mode. Validate this concept. I'm not lying to you. It's the truth. Go and find out for yourself. This is something you can actually do, and there's not any mental gymnastics here. This is something you can confirm for yourself. And if you can get to just being a break-even trader, you just start to notice, given enough time, with back testing and forward testing on a demo account, given enough time, you can start to kind of identify okay, I'm entering this trade, yeah, but the past few times I've done something similar to this, it didn't really work out. There were either break evens or losses. Perhaps I'll wait for price to go up here and then I'll sell up there. And maybe that won't happen. Maybe it won't set up that way. But if it does, then I will take a trade if that happens. And so you wait and you wait. You've been doing this a couple weeks, a couple months. Then you get the trade and you get the entry. And then maybe it bounces immediately and goes to the profit target 60 to 70% of the time. Then you've got a little something there. Then you notice, okay, for those trades that work, there's some of them that start going into profit. Then they start ranging. And usually if I could get out at break even or a small profit or small loss, those would have ended up going to the stop loss. And then you can start sort of recognizing the price action that dictates that trade is a little bit less likely to work than what you originally intended whenever you first entered the trade. You can then manage the trade based on the context. You can do what's contextually appropriate as a result of your subjective discretion and experience and price action discernment and intuition just by simply looking at what the damn chart is doing. And again, This just takes experience. That is what I'm begging you to do in this video. I'm gonna have to end the video right now because there's really nothing else to say. It is that simple. Just get more experience seeing this over and over again. If you're not in my free Telegram channel with 60,000 members, you have nothing to lose. You can be in there in a few seconds by just clicking the first link in the description. They're at the top of my website. It's like a little button you just click there. With that being said, please keep in mind, trading is risky. Most people lose money. I cannot guarantee you anything. You are probably going to continue to lose money trading, but there is a small percentage of you, and that is who I am talking to here in this video. The people that are going to be persistent and continue to try trading, who literally do not have a plan B. They want trading to work out. You know, they're going to keep working their jobs and having their income in the meantime, but they're going to literally put their all into trading. Trading is not easy, but it is worth it. Whenever you're feeling like giving up, remember that statement. Trading is not easy, but it's worth it. Without further ado, I'm going to end the video here. If you liked the video, make sure to do whatever the hell you want to do. I'll see you in the next one. Cheers.